Bitcoin is about to break the trend line, and if it succeeds, then the price could go up to $12,000 and on. But the trading volume on spot cryptocurrency exchange fell by as much as 55%. The number of DAI stablecoins blocked in the compound service is 3 times more than their issue. This potential vulnerability affects Zcash and all cryptocurrencies. Glad to welcome you to the Coin Post. As part of the cryptocurrency market review, we're gonna talk about Bitcoin, focusing on its price. Then I suggest we discuss a paradigm shift in the cryptocurrency market. Simply put, what happened to the trading volumes? And in the second half of the video, I want to bring up the subject of decentralized finance. Is there any catch there? And in the end, we're gonna take privacy cryptocurrencies, specifically Zcash, which every man and his dog seem to track. Click the subscribe button and turn on the notifications if you haven't done it yet. Thanks to everyone who is watching us. Let's begin. Let's start with the charts, and here's one fascinating pattern that Alessio Rastani decided to share with us. According to it, Bitcoin is about to break the trend line, and if it succeeds, then the price could go up to $12,000 and on. After all, if you look back in history, there was a similar picture in 2019, and we can also find the same picture on the Bitcoin chart for 2014. Then the price also stopped a long-term decline and quickly returned to the maximum of $1,000 at that time. Next, Alessio gave other examples of similar charts, including the ones from the stock market. But I want to say that this forecast is actually no different from this picture. There are candles more familiar to everyone, and this is actually the same global downtrend that we have talked about on the channel many times. On the Alessio chart, it just looks like more likely to break through right now, and it's the only difference, although it's just my point of view. Let's take another look at the Bitcoin chart. For the 10th week, Bitcoin has been moving along the 50-week moving average, pardon my tautology. And if Alessio's thoughts on whether it breaks down or not have 50-50 chances, then the 9-week consolidation indicates the market getting ready for a strong movement. A skew study, which shows a record-breaking correlation between Bitcoin and the S&P 500 index, can play in favor of the bulls. And if Uncle Trump fails, the balance may tip in favor of the bulls. We can also get support from the proponents of Tether, responsible for the BTC price manipulation theory, because Messari analysts said USDT recently passed $10 billion. Well, neither research portals nor Tether gives us such numbers. And one more thing, literally while making of this episode, altcoins were growing faster than Bitcoin. It has already happened more than once, and this is a sign Bitcoin price getting ready to go up, although it's not accurate, like everything on the cryptocurrency market. Now I'm gonna move on to the next thing, because the situation on Bitcoin is hugely controversial, as during any sideways drift. Let me remind you that all of the above is not a financial recommendation, but only information for you that should help you make your own market analysis. Analysts at the CoinGecko portal made an interesting observation. After the March crash, the cryptocurrency market capitalization grew 44%, but the trading volume on spot cryptocurrency exchange fell by as much as 55%. These two parameters used to be always correlated, and with the capitalization growth, activity on exchanges increased. But something seems to have gone wrong, and there are two reasons for this. Firstly, there is a substantial outflow of cryptocurrency from exchanges. We talked about this earlier. The reasons are both the drop in confidence in several platforms and the intention to keep Bitcoin for long-term investments. The fact that more and more people are choosing the HODL strategy is one more pebble on the side of the bull's scales, and also a hint that Bitcoin can still try once again to go in the direction of 10,000. Secondly, why trade Bitcoin when there are more and more crypto derivatives? Paper Bitcoins are gaining momentum, and it makes sense that traders leave the spot market preferring more flexible trading of futures and options. And now it's not clear if it's good or bad for the industry. In fact, it's merely a natural course of events that couldn't be avoided. Because where there's a spot market, sooner or later derivative trading instruments appear as it grows. It happened with stocks, oil, gold, and so on. And to my mind, Bitcoin is no worse. In an original study by CoinGecko, They suggested that the decline in spot trading was due to the decentralized finance sector's growing popularity. Whether it's an objective statement, let's discuss further. We're taking DeFi for the second time in our videos. The first time was when we talked about it in detail in the context of the future of Ethereum. As noted in the CoinGecko report, this sector is getting popular. And here are some statistics. The number of bitcoins tied to the Ethereum blockchain using 2 WBTS and RAN BTS tokens exceeded $118 million. It's also worth mentioning that the total amount of funds blocked in DeFi is about to hit $2 billion, and this is mainly due to the Compound project, which is now in the first place. Don't you think that it all looks too beautiful to be true? If yes, it's an exciting fact, according to which the number of DAI stablecoins blocked in the Compound service is 3 times more than their issue. Let's check it together. Go to the Compound website, then the Markets tab. And there we can see that the number of DAIs is more than $595 million. Now let's go to the CoinMarketCap and see how many DAIs exist. And wow, what a miracle! There are only $175 million. You may ask, how did this happen? It's called fractional reserve banking, a worldwide known practice. For example, someone put $100 in a bank. In turn, the bank gave a $90 loan from these funds. If a borrower takes these $90 and also puts it on the account in the same bank, then we'll have $190 in balance. And then you can go on repeatedly in the hope that all depositors will not come at once and ask for their money back. That is why in the crypto community they don't like and don't trust banks, because it's making money out of thin air. And now we can see similar techniques getting into the decentralized finance sector, which has to be kind of open and protected from such manipulations. But as we see in this example, decentralization is not a guarantee that money will not be created out of thin air. For this reason, the heads of the 2 DeFi projects, Compound and Celsius, are arguing on Twitter. Basically, they ended up accusing each other of scams. Personally, I really like the idea of creating a financial system free of banks. And DeFi may well become the one. But the stories with hacking protocols, errors that come to light at critical moments, like during the March market crash, as well as using fractional reserve tokens, force me to make a lousy forecast. It sounds like this. Now, DeFi is following the ICO path and is gonna inflate a bubble that could hit the entire industry. And only after that, it will be possible to return to the idea of creating truly decentralized finance. Next, we're having an equally important topic concerning privacy cryptocurrencies. And I want to remind you that we value every subscription because it helps us continue to work and promote the idea of Bitcoin and cryptocurrency. Those who don't like showing their crypto income and just fans of privacy coins have to be careful, my dear people. Media reports say that the US Internal Revenue Service has decided to develop or find tools to track privacy cryptocurrency transactions. I'm sure that the guys from Chainalysis and Elliptic have already written to them and offered their services. Because these companies, they specialize in analyzing blockchains and are not shy about cooperating with the authorities. Not so long ago, first Chainalysis and then Elliptic announced the beginning of monitoring networks of privacy-protecting digital currency, Zcash. Zcash developers have already announced that it's complete nonsense, and no one can track transactions that use anonymous addresses. The fact is, Zcash, like many other cryptocurrencies with a claim to anonymity, has 2 types of addresses, public and private. If you want to hide your money, then you need to use the latter. But there's a problem. Markets and cryptocurrency exchange stores may refuse to accept or withdraw funds to private addresses, and you'll have to use public ones. Zcash developers claim that if you send cryptocurrency from a private address to a public one, an outside observer will know nothing about the sender. But because Chainalysis and Elliptic found out how to connect public and private addresses, they could find other secrets too. This potential vulnerability affects Zcash and all cryptocurrencies that offer the simultaneous use of public and private addresses for tracking. And if I hypothetically wanted to hide something, then I would choose Monero. At first glance, it has quite a simple privacy algorithm, but this is why it has maximum security. Share in the comments which privacy coin you would hypothetically prefer and why. And that's it for today. Thanks for watching. It's the Coin Post channel. Subscribe and get enlightened.